Good morning, Franco here with Trading Futures Live. This is a pre-market analysis. I'm by myself today. George is not feeling well. So let's jump right into it. We're gonna start with the almighty US dollar. This is the daily chart. Remember, this is the huge supply that I have here from 2002. All this area is from 2002. Now, yesterday we had a sharp rise on the dollar. Very odd because it didn't got to even this previous pivot created a few days ago in June. But the dollar is being very strong and is demonstrating it. Here's the thing. I have two areas that are very, very important here to take a look at. So I do have this one, which is a supply. It's been working for a few days, right? I have 22 to like 5 days, right? 5-6 days. The dollar hasn't going through this supply. But I think the dollar is in such a bullish environment that it can be blown at any time. So this is the 30-minute, right? I was expecting yesterday the dollar to get to this point, right? For the market to start dropping, but no, the market started dropping here. So that's why I said in my recap, the expectation about this market is very, very, very important to have them realistic, right? So today I'm seeing the dollar here started to bounce from this rally-based rally, and I do expect a lot of volatility because we do have, and we're gonna go back and see that in a minute, a lot of news reports coming out today, right? So this is the 30-minute is in a neutral environment, but in a very, very bullish long large time frame. If we go to the 5-minute, this is one thing that I want to take a look at. Here, if we break these two pivots, which is the open from last night and the London open, I do expect the dollar to break here, come back even shallower, and then keep going, right? And that will make the market to drop. If USD does not break this, the market are gonna rally today. All right, so we have the dollar here. We'll probably come back to the dollar later in this video. Let's go check the news reports for today. Let me know if you guys see this. Okay, 150. All right. We had at 7 a.m. we had real estate market reports. Mortgage application 30 years old came worse than expected. Real estate market is deteriorating very quickly. Then we had core durable goods orders came better than expected. Then we had the trade balance came better than expected, but this I was analyzing this number, and where when the dollar is strong, you have a better position with the trade balance. You go buy in other countries and things are cheaper. So I don't get seduced by this number being better, right? Retail inventories came higher than expected, and wholesale inventories as well. Then we have at 10 a.m. pending home sales, very important numbers for the market. Real estate market is very important for the stock market. Then we have 10:30 crude oil inventories, and then the big news today is the Fed meeting. Later in this video, I'm gonna review the FOMC Fed interest rate decision probabilities. So later after we'll go check that. All right, so coming back to the charts, I want to show you also that the yen is very neutral today, and it makes sense because we're waiting for the Fed meeting to come out, the statement. We don't have economic outlook projections, which is a report that the Fed give us. I think it's 5 or 6 times a year. We don't have that in this meeting. Probably the next one. So that's a very interesting report that we use to assess how the economy is doing and how the Fed is thinking. But we won't have that. We just will have only the statement from Powell. All right, so the bond yield today, bond yields are fairly neutral, but is in this demand, meaning that the bonds is in supply. So I do expect this to hold, and if it doesn't, right? If it doesn't, let's say it does this, right? I'm exaggerating this move. It could be a lot smaller. Let's say like this, right? If this happens, then the market will could experience some drop. If the contrary is true, depending on how far it goes, the market could rally. But let's say if it goes like this and stays steady here, like if it's been spending a lot of time in this range since April, right? We're almost in August. So if this stays steady, I don't expect any effect in the markets. But for today's trading session, I do expect the dollar to rally later. And what does give me that information? I also not only check the dollar chart, I like to check the euro chart, the euro dollar chart. And this is a pretty bearish pattern. This was a retracement, right, to this area, and the euro couldn't keep going. Now it went up during London, but it's stalling right there. So this euro chart, if we look at it, the most common pattern might be this, and then keep going, right? So I do expect the dollar to rally today with the Fed news, but we'll see. Regardless, the way we trade the markets is we watch the internals, we watch the overall sentiment in the market, the other equity markets, the ES. I trade the NQ, just trade the ES, but we take a look at them. Like we took a look at the YM, we took a look at the RTY also. All right, so another chart that I want to visit is the VIX. VIX is in a very conflicting area right here. A lot of trading around here, as well here. So it's like a double channel, right? Like this. A lot of volume and time spent here, right? So the VIX is trapped between these two areas. It's been trapped the whole year. So every time it comes to the lower part of the chart, it goes back up. So we might see a VIX spike today. Remember, this is an instrument that is tradable. This one is a future. This is an index, but it has a future that is tradable, right? Very volatile, by the way. So the VIX could rally at any time, and if the VIX ends up just dropping, then that's our confirmation for the subsequent rallies on the next few days, right? But I'm skeptical. I do think the VIX could start to go up today. Then we can go check crude oil. Crude oil is dropping, which is good for the market. The market likes a cheap crude. Not very cheap, but certainly cheaper than $100. So when crude oil drops is a good sign for the equity markets. Then metals have been flat. There's no point to spend time there. All right, let's go to the NQ. The NQ dropped yesterday, but is rallying on earnings. Google reported worse than expected earnings and earnings per share and revenue and profit margins and everything, but the stock is rallying, so NQ is rallying. If we go to the 30-minute, I got a couple of areas of interest for today. We have this 12,560. If we get to rally with the Fed news, is a good supply. Well, depending on what time we get here, right? But if we get here like 3:30, there's no point to take this. But if we get here early, fairly early, between 2 in the afternoon, we might use this area. I do have these overnight pivot created after the Google earnings around here, like 12 to 60. I didn't mark it off because I don't. It's overnight. I will have to wait for a zone to be created during the trading session. I do not like this pivot. This was just either short covering or the earnings reports. I do like this area though. This is a 9:30 from July 19th. That's last week. Is where it started to bounce. All these, so it's already used up. It's the best area for me is this one, even though it was this candle is pre-market. This is such a big candle, and then we had the open here, very sideways open, but then we had the explosion up. Then we revisited the other day in the afternoon. So I started to see that the market drops in the morning, but it goes back up in the afternoon. So that's the type of behavior very common that I've seen before in the markets. All right, so that's the NQ. I want to check also for the Fed news today. We have the probabilities for today. This is 0.75% and this is 1%. So clearly the volatility is, clearly the probability is for the Fed to raise 0.75%, 75 basis points, instead of the 1% or 100 basis point. It's curious to me that few days ago this was around 90% and it dropped to 26%. That's because the Fed did not give us any other statement or clue or interview or any other member saying that, all right, we might have the 1%. So the market is pricing in 0.75, but this and we cannot. I didn't find the probability for the past meetings, but this is usually 10% or less. So 26% is a high uncertainty. So the market is uncertain today, and what happens when uncertainty is present? People tend to sell, right? That's what makes the market to drop when uncertainty is in the market. But it's good to know that 26% is a probability for the Fed to raise 1%. I personally think they should raise 1%, but looking at this chart, I will think that the 1% will shock the markets. I don't know if it's in a good way or in a bad way. I don't trade with this information. It's just a very good information to have. I just trade off of the chart, off of the internals, and that's what I like to trade. Then I have the Fed monitor. This is another website. This is fairly equal, right? All right, so my game plan for today, before the Fed meeting, tradable reactions, leaning more to the short side. If the internals support the move. If not, if the internals are looking very bullish, I will want the dollar to at least be in some sort of supply created from yesterday or at the top of this range around here, right? That's where I want to go long if the internals support it. If not, I would rather it go in short in the market today. So that's all I have, and I'll see you guys in 10 minutes. Thank you.